Your stop loss, you don't want to place it on the opposite side of the consolidation box because those are often targeted. So just put it on the opposite side of the moving average ribbon. The initial price target is the height of the box multiplied by 1.5. And that's projected in the direction of the breakout. Now, if you are more conservative, just aim for a risk-reward ratio of 1 to 1.25. So for every dollar you risk, you're looking to make $1.25. If the price trend continues, trail the stop with one of the moving averages. Allow your profitable trades to run as you get more experience, but you certainly do not want to give back more than 50% of the open profit. Let's look at a few examples. This is a chart of Bank of America. And listen, I chose less than perfect example. And this has a compression of the shorter term averages, the 10, the 20, the 50. The ADX, it's below 20. It shows a weaker trend. And once price breaks out, this chart gives a pullback. Enter on the break of the pullback candle. Stop goes under the averages and your profit target is set at 1.5. I also want you to notice that the ADX is rising and it's going above 20 level. That just shows an increase in trend strength. Looking at forex, we're going to look at the euro yen. We're going to use all the moving averages for this one. And I do find that currencies tend to be decent trending instruments, and moves from consolidations like this can run a long way. So here we have the consolidation. We have the breakout that eventually pulls back deeply into the consolidation. That happens. But price does it again, breaks out, and it holds. Now you have to understand that pullbacks can appear in a lot of different forms. And here, this candle would be a pullback on a smaller time frame. But regardless, it's a lower volatility candle. We see a rising ADX giving support to continued upside. Enter on a break above. Stop goes below the average. Profit target is 1.5 times the size of the box. Now, no strategy is perfect, right? Failed breakouts occur. But warning signs include volume stays low. You see a flat ADX reading for many bars. Or you're going to see price return deep inside the ribbon within a few candles. In this case, exit your position, reevaluate. Managing losses and doing that effectively, it's critical to preserving your capital for higher probability trend opportunities. And you want to keep your risk low until you have the experience to handle larger positions.